You're in a business where property is actually naturally cyclical and it differs from markets to markets. As CEO of Lendlease, how do you go about managing the exposure and risks in the different markets?
Yeah, it's very important to have a portfolio approach. The reality is Sydney is not that close to too many other cities, so you've got to have people on the ground in each location that you trust. But unless you have a clearly established strategy and vision, which everyone is aligned towards, it's very difficult to manage from one location across so many different
How do you make
parts
sure
of the
which
world.
one runs first? How do you go about making the right bets?
Yeah, we have a structure of investment committee approvals. So at a regional level, they each have their own investment committees and they have hurdle rates and targets across the various segments. And then beyond a certain limit of authority, anything for capital approval has to come to a global investment committee. I chair that committee and my CFO and Chief Risk Officer are also voting members of that committee. And we make capital allocation decisions very much in line with what our target portfolio allocation to a particular country is.
Sounds like a very disciplined approach.
It has to be, and I think if you major investment managers around the world have a similar approach to their investment decisions. We mirror that type of approach. So our aim is to be about 50% in Australia and no more than 20% in any other non-Australian location. And we're probably at the upper end of that in London today, but over time we'll grow a little bit more in Asia and the US.
As CEO, you've also put in place a capital efficient structure where you put instead of putting all your development risks onto your own balance sheet, you're actually bringing in investment partners to share some of those risks. How are these partnerships coming along?
Very well. It's a critical part of our business. So we're a business with a market capitalisation of in the order of 12 billion dollars. We have a $70 billion development pipeline to build over the next 10 years or so. We clearly don't have the capacity to do that ourselves, so we rely on having very strong relationships with a number of the large investors internationally, and they've supported us very strongly and they've done quite well out of that relationship. They've invested in high quality product and they've made very good returns. So we know well in advance of what we go after who we think the preferred investors will be.
How do you know that?
We have regular dialogue with them. You know, we have a team that is very close to their teams. We spend a lot of time in different markets around the world understanding their drivers. Today we have about 150 international investors in our portfolio. We have 30 billion of funds under management. If you look at our pipeline, there's at least another 30 that will have to come through to fund that pipeline. And I think for investors, they have a portfolio approach to risk and investment, and we do as well. So we're quite aligned in the way that we think about risk during the cycle and how best to mitigate that risk. So I think we've got a lot of synergies when it comes to the businesses we're in.
Hi, I'm Christine Tan, and thanks for watching Managing Asia on CNBC Live. You can check out more of our great content by clicking on the videos on screen. And don't forget to subscribe to our channel for the very best in feature programming. Thanks for watching.